Hello everyone, welcome to the latest video on gold. So it's Wednesday, 17th of May. So I'm just going to go over price action and explain exactly what we got yesterday and what we can expect looking at current price action for today. So yesterday we was looking for that bearish move down, and that's what we got, pushed down here, and then we got a little retracement with the news and then a continuation down to target these previous lows in orange. And we had a low over here, which is there, and that was to go below 2000 and retest this grey area which we had on the 4-hour time frame, which is this manipulation area here. So what we could do before going on is we have a new zone that has been shown, which price is currently going to at the moment. So this would be used as your, this could be used as your bullish support. So these two candles here started the big upwards move. This candle here was the last liquidity collection from the sell side, which took the liquidity from here, then started the big move up. So that's a key area. That's why we're going to just put that in grey and drag it across, and you can see prices coming down to that now. Let's go to current price, and on the 30-minute time frame you can see we're just hitting that now. So I wouldn't be surprised if you start to get a reversal around this sort of level at current price, around 1983 area. So yesterday, what clues could we have spotted that it was going to continue down? Well, we had these grey areas here which we pointed out in yesterday's video, which could be used as bearish support. So we was looking for a reaction at that area. First, we created a double bottom with this low here and this low over here. That's why you got a line running along there. So that indicates that price is likely to go back to that level at some point. So when you get a double bottom created like this earlier on in the day, or not at a major time of day, then it's likely to be taken on later on in the day in a different session. And you can see price came up, created liquidity here. So you can see we've got a nice rounded top. This was your first bearish FU here. So this was your first sign of bearish movement. So that would be where you want to look for to enter. Push down here, candle closes, and on these two candles, it retests that area. So you'd have a grey candle from the top of this candle, this cross candle, doji candle, whatever you want to call it. So you put a grey area from the high and low and drag it across, and that is where they are retesting the main volume of that bearish move. So that's why you got these two candles retesting that area, and then you got a reaction to the downside. That is showing you that manipulation is to the downside, and we are focusing on collecting sell side liquidity, and you have clear liquidity in the form of a double bottom. So that's why price went down. Then you had the news, which pushed price down once more, took that, but we also created a rough double bottom with this candle, to the low of this candle at 2001, and the low of this candle around just under 2001. So it's a rough double bottom, which means if you do get support from this area to the downside, it will likely take out that low, because we also have another low over here, which is a previous low. So then price went up. This created a bullish FU, these two candles. So you would normally have a grey area running along there. And this is where a lot of people get mistaken. They think, okay, it's created a bullish FU, it's going to retest, and when it comes down to the retest area, I will look to buy. But with manipulation, it can create a bullish FU and then quickly divert and go the opposite way. And that is showing a higher level of manipulation. And that is called a FU negation, which is where it creates FU in one direction, collects that liquidity or retests a support level, and then quickly turns and breaks that FU. So this shows you that there is more power, more manipulation to the downside. So with the news, we got impulse move to the upside, retested that bearish support, and on the smaller time frames, let's go down to the 5 minute, you would look for your bearish support in this area. So you got the push down, and then you got another push down here, so then it turned into support and resistance, and this would have created, this downwards move here would have created your bearish FU, and that is a tiny little bit of liquidity left behind up here because the previous candle is higher than the other candle. So let's just look at the 15 minutes, see if it did create a bearish FU. Yeah, there we are. So this is the area we are talking about. You've got a little green doji candle there. This candle takes the high and then starts the downwards move. That is your confirmation that bearish movement is to continue. And you can see when we got down to this manipulation area in grey, because it started the upwards movement and created a bullish FU, you can see we also created another bearish FU there. And that is because that is a manipulation area. So you're likely to get multiple FUs in one manipulation area. So that's why you got a bullish one there and then a bearish one there, and that is confirming a continuation. So you have one bearish FU there and one bearish FU there, and you are targeting at least this low. Price went down, took that low, retest, support and resistance, then continued on to the higher time frame. And that is just explaining what happened yesterday. Obviously, from yesterday's video, your main target would have been around 2,000. And we did have the possibility of going lower into this grey area. So, for the next few days, I'm guessing I'm going to leave it up to you to do the forecast. From the weekly forecast video I put up a few days ago, you should know what I'm expecting or what I am focusing on now. We've taken the main pieces of sell side liquidity, and you can see we're getting a reaction off that grey area at the moment. If we focus on today's price action and get rid of that arrow, because that's in the past now, you don't need that. Get a liquidity line out, and you can see we have left behind clear liquidity in these highs here, because price has gone up and it hasn't taken many of the previous candles. So you can see this candle here is followed by this candle, but the high does not take the previous high's candle, so that leaves behind liquidity, and that one's also done it. And what that does is turns it into a specific level where they leave liquidity. So all you'll do is run along there, and we're just going to see what sort of price that is. 93.2, 93.4, 93.4, 93.9. So you got a rough area of liquidity there, and then you got two flat tops here that are nearly exactly the same. So that is liquidity you'd be aiming for today at the minimal. So hopefully that helps. Message me if you've got any questions. All the links are in the video description if you want to go check them out. Have a good day, take care, and goodbye.